Comparing outcomes, a carbon strategy, constant product AMM, and HODL. A simulation was performed comparing a carbon strategy versus a constant product AMM, benchmarked against HODL. Alice, Bob, and Charlie all start with 100 TKN and 1000 USDC. A 50-50 is required for a constant product AMM, and therefore TKN is equivalent to $10 in this simulation. Alice, Bob, and Charlie all start with $1,000 worth of TKN and $1,000 worth of USDC, giving them each a starting portfolio valued at $2,000. Alice creates a trading strategy on carbon. She chooses to set the parameters for her buy order at $9 to $8.50 per TKN. For her sell order, Alice sets her parameters at $11.50 to $13 per TKN. Some of Alice's TKN is sold when the price first hits her sell zone. As Alice's TKN is sold, her USDC balance increases in her second order. Now she has more USDC to buy more TKN if the price hits her buy zone. It does shortly after. And Alice is now buying the dip. The chart continues to move up and back into Alice's sell zone. When the price action first re-enters Alice's target range, some of the new TKN acquired at the dip is now sold off. Once the price exceeds Alice's sell zone, all of her TKN has been converted into USDC, which concludes the simulation. Alice now has a few options. Continue to let the strategy play out if she thinks the price will re-enter her buy zone. Cancel the strategy and create a new one using her USDC and another TKN. Adjust her parameters to reflect the changing market conditions. HODL her USDC for a future trading opportunity. Charlie chose a HODL strategy. At the end of the simulation, TKN was valued at $13 per TKN, giving Charlie an ending portfolio valuation of $2,300, a $300 profit. Bob deposited his USDC and TKN to a constant product AMM liquidity pool. He started with $2,000. He ended at $2,290, a $290 profit, but a $10 loss versus HODL. Alice created a custom strategy on carbon, and was left with a portfolio balance of $2,732, totaling a profit of $732, over 2.5 times the results Bob saw after providing liquidity. Charlie's HODL strategy earned him a $300 profit. Bob made a $290 profit by providing liquidity to a constant product AMM, but a $10 loss versus HODL. Alice, by creating a custom strategy on carbon, earned a $732 profit. Alice's strategy was created and executed by only taking a few simple steps. Alice nominated buy and sell orders with custom ranges. These orders are automatically linked together and comprise her strategy. Fund one or both orders with the ERC20 tokens of choice. As an order is filled, partially or completely, liquidity continuously rotates between its counterpart, automatically funding the execution of the strategy. For more information on carbon, visit the Carbon website, read the Carbon white paper, follow Carbon on Twitter, and visit the Carbon Medium.